Welcome traders to a live Admiral Markets webinar. My name is Chris. Today we're going to take a look at Fibonacci and waves. That is a focus of our special series here on Forex strategy going up to end of February, in fact. So we still have, I think, six sessions left. So looking forward to that. If you're, of course, interested in catching our analysis on Twitter, you can do that on the website, first of all, but of course also on Twitter, at Chris Horsick or at Admiral Markets. Before we dive into today's topic, though, be aware that this webinar is shown to a global audience. May not be suitable for everyone, though. Please visit admiralmarketsglobal.com, select your country of residence, and contact appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So last week we talked about key fib levels. Just a very quick reminder, basically for those that maybe missed it or would like to have a rehearsal. Basically, we use the Fibonacci levels that are, some of them are Fibonacci sequence key Fibonacci levels like golden ratio 61.8, which is basically based on the division of the Fibonacci sequence levels. For instance, 5 divided by 8 or 34 divided by 55. The other Fibonacci levels are important too, 38.2, 23.6. Those are all based on the Fibonacci sequence levels as well and the division of that. The 50 is the halfway mark. We added for convenience sake. And the 78 and 88.6 fib are basically square root of the 61.8. The 0 and 100 mark the top and the bottom, or the bottom and top of basically the fib you have placed on the chart. The targets, I use minus targets instead of expansions, minus targets indicating basically where we could, of course, or the currency could be aiming for, or the instrument. Basically, what I do is by using minus targets, I only have to draw one fib tool on the chart. It will show me the retracement levels and it will show me the targets. If I am basically in uptrend and I have basically price here, and I draw the fib from there to there, from the blue circle to the blue circle, and I have retracement levels here. This is the 50, this is the 38.2, and then deeper fibs, etc. Then the targets would be above this top, up in here. All right. The idea is that if price makes a retracement, then bounces at a fib, and then it can go up to the targets. So I have the targets and retracements on one tool. So check out the webinar of 2 weeks ago to know more about how to add the fib levels that I have and how to draw the fib as well, which swing highs to use, and which parts of the price action should we use. Also, when should you use the fib? Of course, when the market is trending or going impulsively. The invalidation level is always the bottom in the upside or the top in the downside. Now, we didn't talk much about LED waves yet. We're going to tie that in soon, how you can use fibs and waves. They have a natural connection, and we'll do that soon. All right. We talked about basically finding swings and fibs on those swings last time. This time we're going to be more practical. We're going to take a look at how to use those fibs on live charts. We're going to use the info from 2 weeks ago, but do it in a more animated way. We're going to be looking at more practical examples. All right, so before we do that though, let's take a look at admiralmarkets.com. Here you have all kind of information, platforms, products, analytics, education, among other things. And let's take a look at the calendar first of all. Just bear with me there. All right, there we go. So today we have IFO business climate. You can see red tagged. It's a German announcement, part of the Eurozone. Otherwise, of course, be aware of the green and yellow events as well. Those sometimes also can alter the market or have impact on the market. We got unemployment rate here, for instance, in Russia, In the US, we have some crude oil stocks. We have a Bank of England governor speaking at 4:30. All right, so be aware of this throughout the day and the rest of the week, of course. With that said, let's take a look at the charts. There we go. Yesterday, we, of course, had a webinar already, and we talked about what could happen during the day. So I want to start with that. It's logical. We talked about basically the fact that the pound USD could be in a wave 1, 2, 3, 4. Now, we didn't talk about waves 2 weeks ago that much, but we can add it just for reference. All right. Why I thought that and how we can do that is a matter of a later discussion, and that will be discussed in a future webinar. For the moment, let's just take for granted that this is what we discussed live yesterday during the webinar. And therefore, it seemed from the analysis that we provided yesterday that there was a good chance the price would bounce at the 38 or 50 fib. All right. That's why yesterday when price was reverting here, I was saying it could be an okay short, but the target is close by. Let me open the dashboard if there are any questions to see your chats. If you have any questions, feel free to use the chat, and I will see it and respond to it. All right, so let's discuss quickly some of the reasons that I thought that price is going to make a retracement, first of all, here. You might wonder why, right? Because price is showing bullish momentum. It's in an uptrend at this moment. As you can see, we have clearly higher highs and higher lows. Why would I expect a turnaround at that spot? So a few reasons, basically. First of all, if we put a fib on the very first swing high, swing low here, we see that price has reached a key Fibonacci level, the minus 272 target. So those targets often create a response. Now, what that response is depends. It could be a retracement. It could be a reversal. In this case, we see when we put a fib on this swing high, swing low, we see the price respected the 38.2 fib. So the first target is the minus 272 target. Now, not always will this target get hit. Will this target get respected? All right. Sometimes it will not get hit. Most of the time it will. Not always will it get respected. Sometimes price will accelerate through it to the minus 61.8. That is something we have to monitor lower time frames. We have to see how the candlesticks are reacting to that target to judge which of the two is more likely. Some reaction is very probable. Maybe not on this time frame, but on a lower time frame, on an hourly or a 50-minute chart. So when price is very close to that, you want to be careful to take any trades into that direction. All right. At least what you want to do is wait for some 50-minute or 1-hour correction, and if it then starts to break above that correction, you can, it's possible to take the breakout for an extension. All right. If it doesn't look like if a breakout is not occurring, right, then it could be that a retracement or perhaps even a reversal is occurring. So in other words, the minus 272 target is a break or bounce spot. It is a decision zone. All right. So that was one of the factors that went into my mind yesterday, why the pound USD could be at a decision spot. All right, 125 round level added to that, of course, as well. The more confluence, the better. They're not mutually exclusive. Just because 125 is there and a minus 272 target, that's not bad, that's good. There's more confluence at that spot. Now, why, you might say, why did I even put a fib on this swing high, swing low? So first answer is the fact, please look at the video of 2 weeks ago on fibs. That was 11th of January, if I remember correctly. Second of all, quick answer, this is momentum. You can see between those blue circles, there are basically, it's one push. Why? Because they're a series of candles pushing in one direction. And the candles that show any bearishness are small, just a couple there. And basically, this is one momentum push. So it's natural to put a fib on this momentum. Once again, you want to put fibs when price is trending or when there's momentum visible. All right? Even if that's counter trend, it is possible to use a fib on that. This upside is counter trend. Why? Well, look at the daily chart. All right? You can see price is moving lower. So putting a fib on this is counter trend, but it's with the momentum. So that's fine. That's why this is a good fib. That's why I was warning traders in my wave analysis and perhaps webinar last week, I don't remember, but that these fibs here, any of these three fibs, or any of these fibs, but I would have guessed at this moment one of these three fibs could be a bouncing spot. Now, why these three fibs is connected to waves. If it's an ABC zigzag, typically these three fibs are used more than a deep fib like this, like these. So the red circles are not, the red fibs there, or the fibs with the red circle, are not as used as often in ABC zigzags as the fibs with the blue circle. So that's tied to waves, that's why, which we will discuss later on. So price indeed stopped pretty precisely at 38.2 fib. That's not always the case. Sometimes price pierces through it a bit. The higher time frame, relatively it will be the same pierce, but absolutely if price pushes through a fib on the weekly chart, that push through the fib, the weekly fib, could be 30, 50 pips. But that's nothing on a weekly chart. So that's something you have to be aware of. This is a 4-hour chart though, and it was a precise hit in this case. That's not always the case. And the minus 272 target giving struggle here. Now, when we zoomed in yesterday to the 1-hour chart, we see that if this is an A, this is a B, what could happen with the C? The C could stop at the minus 272 target. That's true. In a ABC correction, C is often equal to A. That's part of the waves as well. A was 430 pips. So if we calculate 430 pips from the 38.2 fib, we arrive at a figure of 126.80. 126.80 is the minus 61.8 target. So there is a good chance, a high probability the price will get to the minus 61.8 target, and that minus 272 target is only a stopping spot. So from that perspective, when we then analyze the hourly chart and add the waves, you can see that this is not so strange because wave 1, wave 2 is deep, wave 1 is slow, wave 3 goes pretty far. You can see that wave 3 basically, wave 1 is 120 pips, wave 3 is 270, 280. So it's substantial more than the wave 1, which is needed, and therefore it is a possible wave 3. Slightly more momentum than the wave 1, so that makes sense. That's also the reason why a fib was placed on here to here. Okay, furthermore, of course, the trend is up. Looking at the long-term moving average, we see that pretty clearly, and therefore that makes sense to put a fib from here to here. So we have two fibs at the moment. Let me make that a distinct color. That's not so good. Let me make it a different color here. That's a bit better. All right, so let's take a look. So what do we see? Now we see that if that is the case, we have basically confluence at around 126.80, 127. Two minus 61.8 targets. All right, but we're getting a bit ahead of ourselves because, first of all, the first question was, why was this a turning spot? My first answer was the minus 272 target, right, and the 125 resistance. Third of all, you can see, second of all, you can see that basically this momentum clearly higher highs, continuous higher highs and higher lows, and there was not much of a pause except a few candles here. But within 5 to 6 candles, you see a push through. Here, 1, 2, 3, 4, 5, 6 candles bearish, breaking through the lows of this candle. That seriously altered the structure and the likelihood of price continuing. When this happened, it became more likely that price was going to correct with this candle then, and basically that there was a higher chance that this swing high, swing low was over and finished, and we'll make basically a new correction or retracement. All right, so that was part of the second answer was time factor basically, and candlestick patterns that were showing a turnaround, bearish candles. Also on the 4-hour chart, you see two bearish candles here at the 272 target. Alrighty, on the 50-minute chart, yesterday we were looking at price here, somewhere in here, right? Now, if I remember correctly, I said it would be nice to see price bounce a bit first before hitting the 38.2 fib. If price were to continue right away to the target, that would be basically not a good moment to still short it as it retraces back up or bounces back up. All right. In this case, it did make a retracement. Now, we also talked about the fact that, of course, there was a news event, so you got to be aware of that. But price made an upside, found a rejection ultimately without breaking the top, and then indeed made it to the 38.2 fib. Here you can see it in the 50-minute chart. So, all right, there we go. So basically, price completed that correction, bounced at the 23.6 fib, and made this ABC zigzag pattern or ABC correction down to the 38.2 fib. Now you see that the bounce was not perfect. You had a double bottom, still a break, and then a push up. All right, so it's easy to say now, of course, that price bounced, and we all see that price bounced, but it needed 3 times before price respected the 38.2 fib. And that could shake out some traders that are not as confident in a fib or in their analysis. So when doing that, be aware that it can take time. It might not respect the fib as accurately. There could be a small break. In this case, there was an accurate hit twice in a row, but then it needed still a third, basically even broke below it without hitting the fib to the 50 fib and then turned around up. So it's a precise tool, but there are times where it's not as precise as we want it to be, like in this case. So when using a stop loss, always be aware of that. Always be a tad more careful maybe than you normally are if you're a risk taker. If you're already cautious as a trader, then I guess you should be fine. Stop losses. If you went right below the 38.2 fib, that would have been very risky, because wave 4s typically do use 38.2 fib as a bouncing spot, right? But they can go sometimes to the 50. Plus, if you recognize that here's a top, and that's a block basically of support right there at the 50 as well, then that would have been a safer bet to put the stop loss below that, or even the 61.8. Any of those two would have been okay. The 61.8 has a bit of advantage because the wave 1 is here. So if price would go below the wave 1 top and the 61.8, it would invalidate the whole 1, 2, 3, 4, 5. So both are possible. This basically the advantage of the analysis being invalidated. If we go below the 50, it's not invalidated, but it's very unlikely, well, not very unlikely, but on average, it doesn't go below the 50, plus we have a top here. So both are possible and have their merits. Using the bottom here is valid too, but the stop loss is very wide, and the target I don't think justifies it. Because if we're looking at a bounce at the 38.2 fib and we go with a stop loss below, we're looking 180, whereas the target is, all right, target is, if we go for the main target at 126.80, it would be still 250 pips. So yes, the reward to risk would still merit the trade and the stop loss that deep, because the reward to risk is at least above 1 to 1. So yes, but I don't think it's necessarily needed to go that deep with the stop loss in this case. All right. That's about it, I guess. That's all I have to say. You can see that price bounced off that fib and is now basically testing this resistance. So at this moment, I don't think there's anything else to do except wait for the break. If it does break, there's a space up to 126.20, minus 272 target, and there are two. And then after that, R3 and the minus 61.8 targets, the both of them here. So upon the breakout, we got these two zones right there. So no fib trades in the near future, at least for this pound USD, because price has respected the fibs, three of them in a row. One was the 38 here, the second was the deep fib here, and the third was the 38 again here. At this moment, it's breakout territory. Now, what could happen is basically as price breaks above it, let's say there's a strong 1 hour candle here. There are other ways, of course, for using the fibs. We can fib the breakout candle and wait for a 38 or 50 fib of that candle, a hook back to these tops basically, and then see a bounce there. That's another way of using those fibs. All right, but I would need to see a breakout candle first. Strong close near the high, sizable candle for an hourly chart, maybe at least 30 pips, preferably 40 pips. I mean, 50 pips would be great. I'm not sure if we'll get that though, but you see, yeah, let's see. Probably not this hour, but maybe next hour. If this could be engulfing twin, which could be already an interesting signal right at the pivot point as price makes a consolidation here. And the next one could be the breakout candle. There could be two candles of a pause, and then probably I would expect to see the continuation. So basically what is remaining on the pound is a break, pullback, continue. And for that pullback, we can still use a fib. On a 15-minute chart, that could look like this. Break, bull flag, down to the 38.2 fib, which is the pullback, break, pullback, and then the bounce and continuation. So that could be remaining today. In my opinion, there could be that target left. Now, if it doesn't break, if there are some serious bearish candles up in here, right, and there's an attempt to go up, but ultimately there's a wick like this, in that case, I would be neutral. I'm not looking to short it. I don't think it's that great of a spot. At this moment, it could actually, next candle be bullish. This could be just the first attempt. If there is another bullish candle after that, then I would still look for the pullback and continue. If price shows a bearish candle after that doji or indecision, what could happen is I would basically still be looking for a bounce at the 38 or 50 fib. Bounce and a hook back like this. All right, because this could be ultimately just turn into a correction with three legs like this. You see? 1, 2, 3, and there could be another bounce. So I'm bullish, as you can see, whether it happens now or if it retraces lower. I guess that changes if price breaks through the 50 fib. If it breaks through the 50 fib, then starts to make a correction like this, for instance, that would be bearish. If it breaks through the 50 fib, that invalidates my bullish kind of analysis and my bullish trade idea. All right, so that's about it for the pound. The Euro USD, we talked about the fib, important fib yesterday as well, and that was basically based on this swing high, swing low. All right, you can see basically price is moving up choppily. Look at the golden yellow lines here. That looks like a rising wedge pattern. there's divergence between the tops, and price is basically respecting this fib. We had a bounce at the 38, bounce at the 50, bounce at the 61.8 fib, and now we're having a bounce at the 78.6 fib. And as price is basically retracing to these fibs, it bounces, goes to the next one. It bounces, goes to the next one. It bounces, goes to the next one. So could it do it one more time? Yes. There's one more fib, the 88.6 fib, which is the ultimate deep fib. That's possible. Could it be that the 78.6 fib will be it? Yes. All right, but the confirmation of that is really the breakout below this channel. As it breaks below this channel, then we have a with the trend kind of continuation. All right, then we could expect the red arrows to follow through. At this point, the 78.6 fib was an area, point of confluence, a resistance decision zone where shorts made sense. All right. At this particular spot, I'm not sure. Price has already responded to the 78.6 fib. So we'll have to reanalyze it and see if it makes sense. But you can see that anyone who took it is up a few pips, might be able to move it to break even or reduce the risk on that trade easily, right? If you feel for that. Typically, it's not a great spot, not a great moment if you enter after the reaction and price is kind of showing slow movement, like here. So slow movement like this is actually a choppy corrective reaction to a resistance level, or of course for support that could happen too. So it is a bit of indecision at this moment from that point of view, and probably would not be good to go for shorts at this point, just based on that price action. Probably better to wait for breakouts below support as prices is confirming a further turnaround. Now there are a couple of ways how anyone can trade fibs. One is just putting a pending order at the 78.6 fib or at the 38.2 that the pound was showing, and that's it. Or we can wait for price reaction at the fib. Right? Yesterday we were looking at these two 4-hour candles. Right? So that was already a first indication of hesitation. That could have been a light confirmation of candles stopping at that fib. So if you're not taking that fib, those candles might be enough to give the confirmation to take the trade. If you're looking at an hourly chart, 5 to 6 candle rule that I use, 2, 4, 5, 6, 6 or 7. These two candles, or any of these three could be one. When we were looking at the live webinar, we were somewhere here, and I was saying, watch out for retracement and a rejection. Retracement was a bit deeper than I expected. Poking at 107.75, I was thinking 107.60, 107.50. So it went a bit higher, but those things always, they can happen. We try to be as precise as possible, but those few pips, those 15 to 25 pips, those things do happen. Eventually we got a strong candle like this, rejection bar at the top as well, and at those levels we mentioned yesterday, roughly, and then price made a decline. So the decline happened, but the decline was small, right? We're talking about 60 pips. That's not a lot of momentum. So far there's not been a grand reaction to the minus 272 target. Sorry, the 78.6 fib. So from my perspective, there could be a breakout here on a smaller time frame, really a 5-minute chart, because the difference between those two fibs is only about 50 pips. So when it breaks, when it then hooks back and bounces, there's only a couple of pips left there. So it would have to be basically some bull flag on the 5-minute chart that would allow me to maybe scalp a small trade there. More importantly, probably is another opportunity to look for bearish bounce at the 88.6 fib. Anyone who took a pending order at the 78.6 fib, stop loss options are here above the top. That's the best one because in that case, if price breaks through that, that's an invalidation. We're talking about 120 pip stop loss, roughly 130. That's a lot, but don't forget this is a 4-hour chart. For a 4-hour chart, that's pretty decent, considering the fact that we're using an invalidation level. So that typically could be a lot more because this is a swing trade. The target, minus 61.8 target, all the way at parity, just above parity, right? So can that trade work out? No idea. But if it does, the reward to risk for a trade like that is approximately 6-1. 6 units of reward if we, of course, don't manage the trade versus 1 risk. So you can easily see that if that trade works out in 20% of the cases, 1 out of 5, we are a winner in the long term. All right. So will this work out 20% of the time? I think so. I think there's definitely that chance that 1 out of 5 will work. I think a bit more probably, but I'll leave that up to you. I don't think it's that relevant to discuss an exact percentage, but I think it has value there at the 78.6 fib. 88.6 fib, that reward to risk ratio turns even more dramatic. And we can add 50 pips to the profit, knock down 50 pips of the risk. So pending at the 88.6 fib, and we're looking at a 10-1. Alternative stop losses could be above the 78.6 fib or the 88.6 fib. At this moment, the 78.6 fib is not that great because price is responding by going sideways. The 88.6 fib is okay. It is okay to go above 108, let's say 108.30, 33, 35. But the disadvantage is that price can spike a bit above it and then still turn around and more or less respect the 88.6 fib. That's the danger of it. So it all depends what type of trader you are. A swing trader would have found some interest here at this fib and will find interest in this fib. Anyone who's more cautious wants to take a tighter stop loss will be looking for reactions to it, to these fibs, or looking for breakouts after the reaction. So it's all a balance of stop loss versus, or more precisely said, the risk versus reward, and how you want to trade it. There are multiple divergences on the 1 hour and 4 hour chart, as we said yesterday. So I was not interested in trading it to the upside, no matter what, yesterday. That's still valid today. I don't think that this space here is that great. It is better, I think, to wait for a rejection at the 78.6 again. Who knows? Maybe there's some head and shoulders like this, the breakout to the downside, or the turn at the 88.6 fib. Interesting because that is the opposite of the pound, funny enough. So we should expect, if the pound is strong, the euro is weak, then we should expect the euro pound to fall. And we can check the euro pound to see if that's accurate. So yesterday talked about, if I remember correctly, talked about the ABC potential for price But I was thinking that it would go deeper if it breaks above this channel. It didn't break above the channel. It stopped at the 23.6 fib. Is this the best fib? Maybe not. Maybe I should have taken a different fib. If we look at this, for instance, take a look at what targets have been hit. Minus 272 target, as you can see, after the 38 fib hit. All right, so we can leave this one on. Put this riskier fib on, and you see 61.8. So maybe that would have been more precise. We would have seen maybe more info with this one. All right, but that happens sometimes. In any case, we had the channel and trend lines and moving average to work with as well. So anyone who thought about shorting, great job. I'm not a big fan of the euro pound anyhow, but it did turn, didn't go as deep as we expected, but didn't break above the channel, and now is making downside, kind of breaking below this channel as well. But if we correct it, it's kind of iffy at the moment. But more importantly, probably it broke below the minus 270 target, slightly. So euro pound, in any case, there is momentum downwards, and there is this potential for price to fall to the minus 61.8. So that makes sense. We can see that euro pound weakness could happen, even though it might rise up maybe to the top of the channel, the pivot point, or the R1. All right, so something to be aware of. But ultimately, the bigger ABC didn't happen. Now it is below the minus 270 target. So I think there's a new kind of situation going on where it's more likely that price will fall to the target. All right, dollar yen. Dollar yen, when we put a fib from here to here, basically you can see when looking at the oscillator, you can see the behavior, right? You can see it here. And if you copy that, you can see a 5-wave or 4-wave pattern. And the question is, will we get one more push down? And sorry, that probably could be different too. You can see a 5-wave here too. That's another option, right? So it depends. The difference in fib is not so much. 50 fib bounce at the moment so far. So at this moment, we can see that this is most likely the best fib. Price is in a downtrend at this point on a 4-hour chart and 1-hour chart. Lower lows, lower highs. Most recently a lower low, although it was just barely. So this is probably the best fib at this point, right? And you can see a respect for the 50 at this moment. So at this, that could have been one way, looking at the 50 or 38.2 fib, putting the stop loss above the invalidation level, which would be this bottom or this bottom, somewhere above the 61.8 or the 78.6 fib. And putting a pending at the 38 or 50 fib, for instance. That could be one way. If you're waiting for a reaction to price, these candlesticks, for instance, or time factor 1, 2, 3, 4, 5, 6, 7 candle right now, in fact. That could be another way. A third way could be to wait for the breakout. Sorry. Wait for price to push through this trend line, connecting multiple bottoms, basically, multiple support levels, waiting for a push, maybe a 15-minute candle like this, or even an hourly candle. A close near the low, preferably below the pivot point, and these lows, right? And there could be a breakout to the downside, down to 112. Why 112? First of all, if we keep this fib on, we'll see that, well, the target is not exactly there, but if we use this fib, 111.75. All right, that's close to 112, but 112 specifically because 111.98 is a 38.2 fib of this swing high, swing low. This is a daily chart, and you can see basically the price is respecting. This is a strong momentum, and we're seeing a choppy reaction. So I'm expecting price to respect the 38.2 fib. So that's the main target for any potential downside of the dollar yen. Now that would get invalidated if price gets above the R1 and R2, and there would be a different environment going on. So based on fibs, but also partly, of course, based on some confirmations of other tools, we can see what are the main fibs, what are decision zones, what are targets, etc. This is discretionary, of course, and therefore a bit more difficult. Now I promise that we'll look at a non-discretionary fib system in the upcoming webinars. So we might do that maybe next week. Could be a good moment. All right? Not today. We wouldn't have time for that. But next week, I think it'd be a good moment to do that. Let me write that down. All right. Why don't we take a look at one currency pair or two? You may choose any time frame, any currency pair or instrument. First one will get the pick. So what currency pair or instrument would you like to take a look at right now? I'll leave it up to you. We looked at the majors, not the euro dollar, pound USD, or dollar yen, of course, because we just looked at them quite intensively. So unless you missed that, but it would be boring the others a bit too much. Odd USD, great. How about the time frame? Daily, all right. Let me close the mini terminal box here. That's part of the MetaTrader 4 Supreme Edition. Very useful for taking trades. A lot of options here, but we'll close that so that there's a bit more space. All right, so for the daily chart, it never hurts to take a look at one time frame lower or higher to get a bit of multiple time frame analysis. So if we start with the weekly, because we're looking at the daily, to go one higher. We can see a downtrend at this moment, correction within that downtrend, moving average is down. So what is the best fib at this moment? If we look at the oscillator, we can see that the oscillator has gone down here and gone back up here. So with that information, we can take the recent top before that switch of the oscillator and put the fib on like this. All right, from swing high to swing low. We see the price stop pretty neatly at the 38.2 fib. So this could be a consolidation type of sorts of price going sideways. So there are two options. Price could go, obviously, retest a higher fib. There is a slight divergence here, as you can see, between these bottoms. That's good to note. That means that price could hit the long-term moving average, and hence also the 50 fib. All right, because it already stopped at the 38. It could be double top too, by the way. From a breakout perspective, you can see that this was broken. That's something to be aware of. But we should also be aware of new support like this. So we can draw trend lines like that. We can draw resistance too, like this. So some trend lines always give some perspective, especially if price is at a shallow fib. The reason is because shallow fibs are a tad more difficult to trade. Will price retrace deeper or will it break? Especially if you just missed the fib, right? If price was at the 38.2 fib here, great. You're at an early turning spot, probably, right? Most likely. Not always, but typically there will be a bounce of some degree on a lower time frame. When price is messing like this, especially below a lower fib, using moving averages, trend lines helps. Support and resistance to get an idea whether a deeper fib or breakout is going to occur. All right, folks, give me 1 second. We'll be back in 30 seconds. All right, now a deeper fib becomes easier and easier because, first of all, the reward to risk is better. Second of all, there are not many fibs left that it could go to, right? If it's already at the 78.6 fib, like the euro dollar, okay, it has one fib left. But the 78 already is very deep. So there's a good chance it will use that. Or the 61.8. It's not the deepest, but it is basically the optimal level because it's a golden ratio. Many times the 61.8 fib will be used because of the fact that there's an ABC zigzag or it's already a pretty good wave 2 fib, for instance. So it's an often used fib as well. So if it's already at the 61.8 fib, there's a pretty good chance it will be used. All right? Especially if, for instance, if the 50 is skipped for whatever reason, that happens 1 out of 3 times typically, then there's even a higher chance that the 61.8 will be used. So those deep fibs give us a bit more space too, because if price then moves up, right, and then reacts to it, then price is somewhere here, right? So there's still plenty of space for it to break out. There's more space in general because price is not that close to the bottom. When price is making these kind of consolidations close to the bottom, around the 23.6 fib, there's just less space to wiggle with. Still possible to trade, of course, especially on a weekly chart as this. If we then zoom in, we'll probably see some trades. But keep in mind the overall context. All right, so daily chart. We see basically a breakout. We had a fib on here from here to here. On the breakout, right? You can see that price went to the 38.50 fib, down to the minus 272 target. And interesting enough, actually is respecting the same 61.8 fib. Now you might wonder, why use that same fib? One of the reasons it's dangerous to move the fib too early, especially if only the minus 272 target has been hit after shallow fib, like we did actually with the pound. And that's one of the dangers of doing that, is the fact that sometimes this pattern can occur. Shallow fib, shallow target, deeper fib, deeper target. It's a combination of fib patterns that we'll explain next week too. It's basically something that the fifth system that I want to show you will avoid, luckily. And I'll tell you why next week. But one of the things you want to be aware of is if it's only the minus 272 target, right, then you might want to be careful of putting the fib on the next swing high, swing low, which is this blue one. You could, but be aware of this one too, especially if price starts to move aggressively like it does here. Of course, if it makes a bear flag or triangle, then that's okay. So when looking at the pound USD, we only hit the minus 272 target, right? So that's why this fib is possible, but you want to be careful of it. That's why I also said yesterday that you want to see how this responds when it moves down, all right? And that was one of the reasons why taking a pending at the 38 would not be great, and probably better to wait for price reaction, like this engulfing twin with the green circle, before trading that bounce. It could be a bounce. There's a good chance, but be aware that we're already kind of The disadvantage of this environment is that it's it's kind of like a mini no man's territory. Now, if the pound USD, I thought it was not as, I think there was a good chance of a bounce personally. But in overall, you want to be aware of that though, all right? You don't want to get too fixated, let's say, on a fib that might be problematic. This was a good fib, but you want to be aware of the downside or the disadvantage of it. So I think there's a good chance that there will be a bounce here. As I already said on Monday and yesterday. It's reacting to this fib. Now, if you're not interested in that fib, if you're taking that fib at 76, stop losses could be above the 78, above the 88, or above the 100. All of them make sense. We're talking about 190 pips if we use the top, 100, 200. But the target is about 560. This is obviously swing trading, but that's logical because we're looking at a daily chart. All right? If we're waiting for some reaction of price, this doji could have been it. For instance, on the 4-hour chart, we can use time factor, zooming in one time frame. We can see that 1, 2, 3, 4, 5 candles, that could have been the entry. The 6th candle could have been entry, and price is up about 20 pips. In this case, if we wait for the reaction that deeply, it's probably better to put the stop loss above the 78.6 fib. All right? But it is still possible to use a deeper fib. Sorry, the 61.8, excuse me. It is also possible to still put it above the 78.6 fib. In that case, though, it would be about 150, but the target more and more definitely justifies that as well. So both are possible, right? Above this top or above these fibs or top, or the major top. Why is it now possible to use this as a stop loss? Because we have a confirmed top, which is this. When price was approaching the 61.8 fib, we weren't sure if it would A, stop, and where it would stop. So it doesn't make sense to put a stop loss right at the 61.8, in my opinion. Other factors that the turnaround was about to happen was multiple divergence, a rising wedge. So if you thought that was interesting, that could have been extra confirmations of a turnaround. One more aspect, the daily, yesterday's doji could have been one thing. Another method could have been to wait for, basically to wait for engulfing twins at the 61.8. That would have been a slightly earlier entry. Another way would be to wait for engulfing twins like this, but then zoom in again. Potentially, I know that this is very detailed. Wait for a bounce, but for the bounce to fail. 5 to 6 candles on the hourly chart, 2, 4, 5, 6, somewhere in here. Could have been another way. So this is how you can basically try to catch turnarounds on a smaller or even smaller scale. For those not in that trade yet, is there anything left? Well, we had a small bear flag right here, as you can see. Price made an engulfing twin here, made some downside, then the retracement failed. Momentum, bull flag, break. So a breakout somewhere in here could have been another way to trade it. A mini double top somewhere in here on a 5-minute chart. All right, so I don't want to, of course, this is easy to say in retrospect, but I'm just discussing literally, or almost literally, all the potential ideas that are possible based on bounce breaks, patterns, fibs. It's not realistic to catch all of them. All right, but we know that momentum is strong, and we know that after that we should see a bear flag if the momentum is to continue after that. We know that the bear flag could either fail at the double top or maybe slightly higher top like this before breaking. So it's not that unrealistic to think about looking for a continuation there or upon the break. That is behind us. It already happened. So from this perspective, I think that it's time to wait probably. We see that this rising wedge has broken with this 4-hour candle. So I think that at this moment I don't see any particular setup. Price is already at the S2, S3. This is Admiral Pivot Point indicator, which is part of the MetaTrader 4 Supreme Edition. So I don't know. I think that it would have to probably hit the S3, make another bear flag maybe, or maybe even retrace a bit deeper back to this zone, get a rejection there for further downside. I guess ideally, I don't want to, this is maybe annoying, but ideally maybe even wait for this candle, this daily candle to print. Let it confirm the bearishness. Should be a bearish candle, should be bearish closing the low, breaking below this, obviously these bottoms. Tomorrow we can put a fib on this candle, I think, look for a bit of retracement, and there should be another bearish candle like this, most likely. Then the next day could be a bit of a doji. We might see even a retracement like this. After that, 5 to 6 candles means that this swing high, swing low is over, and we might see a bigger fall after that. Let's see if this happens. This is my best bet at the moment if the day closes bearish. What is the target? The first target is actually this bottom. And the reason is because of the pattern I discussed yesterday is the inverted head and shoulders potential. So if price does this tomorrow, then Friday's a doji, next week sees a retracement, and then we see a downside. 73.10 could be the first target. If we do see a hefty response there, we know that this pattern is playing out. If that level breaks, the next target is the bottom, and only then the minus 61.8. All right, so that's about it, I think, at this moment. Anyone who's in that trade, though, doing well, and I think can hold on for the moment, unless today's daily candle turns into basically a doji. All right, then I would close it, because that could indicate bullish pressure throughout today, and in that case, the bearish case is more or less invalidated. For more webinars, folks, please go to admiralmarkets.com, click on education, go to Forex webinars. Today we just talked about, of course, Fibonacci and waves. Tonight, Nana takes a look at point of confluence or point of control zones. Tomorrow we take a look at trading systems and methods based on indicators. Next week we have the same scheduled again from Monday to Thursday. Looking forward to that. Next week, Wednesday, regarding Forex strategy, Fibonacci and waves, we will be reviewing the Fib system, and in the 4 sessions after that, we will also, of course, discuss waves, and then waves in a practical sense as well. So looking forward to that. Thanks for joining me. Above all, wish you great trading. Hope to see you on the admiralmarkets.com website, and see you all soon. Cheers.